The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Day, Money Masters and Treasure Hunters. Welcome to the January 6th frigid Monday, marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, the tools that each of us need in order to empower our potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with empowering beliefs. You know, I believe if you change your mind, guess what? You can change your life. And what I mean by that is that you and I, we've got no idea of that giant capacity that we can immediately command when we focus all of our resources on mastering any single area of our lives. And one of those areas that I believe that we should be mastering is trading. Another is time. You see, once we master time, and this is the key, once we master time, we understand that typically we overestimate what we can accomplish in a year. However, don't lose faith. Because what we do is we underestimate what it is that we can achieve in a decade, folks. So some don't achieve what they truly want in life, and the cause of that is that they just don't truly focus. They don't concentrate their power. Those are folks that we call dabblers out there. They don't master anything. Success, folks, it comes from taking the initiative, from being persistent, from making sure that you express the depth of your conviction for whatever it is that you want. You've got to express that depth to yourself. And the question as you begin your 2014 is, what simple action could you take today to produce the new momentum that perhaps you promised to yourself on New Year's Eve? What one simple action could you take? That's all you've got to do, one step at a time, because the path to success, folks, is to take massive, determined action. But you got to start that one thing at a time. Without commitment, there is no abiding success. So if you want to be successful, it's pretty simple. Just go out and find someone who's achieved the results that you want, copy what they do, and then you'll achieve the same results. It's like a little recipe out there. So the time is now to master anything that you want in life, folks. Life is a mirror, and life will reflect back to us that which we think. So change your mind, guess what? And you will change your world. Let's go check out the world of the markets here. Relatively flat. You could go water skiing out here if you decided to brave the frigid weather. Of course, in the south, it's not too bad out here, so we shouldn't be complaining. The Dow is up 6 points. It's trading at 16,476. S&P is flat, trading at 1831. Composite down 16 points. The leader in the clubhouse to the downside, leading the charge to the downside. Not a lot of help out there from its friends like Apple, which is down $4.50. Priceline down $11. Celgene off $8. Netflix off $7. So some weakness. Amazon is down $6. So you can see where the weakness is coming from. Russell 2000. Let's pay attention to that today. It's trading down $2 right now, trading out at 11.53. In fact, let's go check out the Russell 2000 index, because what did it do a couple trading sessions ago? Well, what it did 2 trading sessions ago on the 2nd of January as we came back from the holiday break. For those of you, today might be your first day back. Well, back on January 2nd, on Thursday out here, as the markets opened back up, what the Russell 2000 did was it came back and it tested a gap. It tested the high of the breakout session from December 20th. That level, 1147.12. So it came back there. It tested it. It did it on lighter volume. That window of support is still out there. You're trading a little bit lower here this morning. If, in fact, it can hold this level here, meaning 1147.12, if it can hold that level 2 more days, I don't necessarily mean Monday and Tuesday. I mean 2 more tests, really, of that level. That'll create a strong little support area, which will provide us with a ton of information. Maybe just simply a consolidating market to the a sideways consolidation market. But the Russell 2000 It's going to be important for us to get a signal from. In the first hour, we covered the Dow. Well, we covered the Dow futures and we covered the NASDAQ futures. We'll take a look at the indexes here now, but there's patterns that showed up. If you didn't catch the first hour, I'm not going to go through it all here, but go tune in and get to Channel 9, and you can catch the archive. This show here is on Channel 10. So we know what we're also looking at when it comes to the Russell 2000. Let's go take a look at the S&P 500 right now. It's trading sideways, trading out at 1830. It has not traded down into that same session here. Well, December 20th, I take that. December 20th, if we take a look at the benchmark, and that's not so much a benchmark, but what was going on inside the Russell, the actual high on the December 20th candle for the S&P 500 was out at 1823.75. You're trading at 1830 here right now. So this shows you, in essence, really, that the S&P 500 is stronger than the Russell 2000. The S&P, we're going to say it's completed its 1 to 1.272 A to B equals CD up. 1854 was the number. It fell just short of that. It got up to 1849, so it was off by, 6 points out there. On an $1,800 instrument, that is certainly within the range. We got a nice little bear sash candle that took place on the trading session of January 2nd out here. Sideways day, so not a lot of information. We'll take a look at the ETFs, get a feel for volume out here. Pullbacks. Look, folks, just a normal pullback, just of the C to D leg here. The dead cat bounce, which we haven't gotten to inside of the S&P 500. So I want to just keep things in perspectives out here, different time frames that we look at things. But 18.1833 is your 0.382 retracement of only the C to D leg. That's not really where you would expect the market to pull back to. A normal pullback takes you down to the 3.382 level of the A to B equals CD, and that's a bit lower. That's out at about the 1810 range. So 1810 to 1818. It would be 1810 that I would think would be the area where we would really get a release of information from. Why? Because, number one, it's your dead cat bounce of the A to B equals CD pattern. But more importantly, what it is, it's coming right into that December 18th day. That was wide-ranging bar out there. That's where we saw the last breakout. That was the Uncle Ben Bernanke going away party breakout, the top of which is 1811 out there. So that's why that 1810 seems like a logical area if we if we continue to see the small little failures here inside of the market. If we take a look at the NDX 100. The NDX 100 probably gives you the release of information sooner than later because it is attacking, or it should be attacking, that Ben Bernanke December 18th day. So that breakout session, we'll go look at the ETFs, 35.10.52. That becomes a strong area. So far, the intra-session low here is down at 35.18. So it has not gotten down there. And if we take a look at retracements, now, inside the NASDAQ never did complete its A to B equals CD up pattern, the one that would have taken it to 36.28 out here. So let me just take a look at just retracements off of swing points. Let's do that. And we're going to go from the last swing point, that's that low on December 18th, all the way to the high that was put in here on December 31st. That was at 35.92. You can see you're trading below, slightly below the 0.382 retracement level. Says if, in fact, it can pierce, if it can close inside of December 18th, ought to go down and get to the 34.87 level. Now, of course, it's going to be dependent on volume, because if the volume is picking up as it's moving into December 18th, and we go switch over and we take a look at the ETF structures, that's the first one we'll look at, is inside the Qs. Let me do the Dow here for you first, though. If we take a look at the Dow, not really too bad here. So the Dow has switched from, if you remember, the Dow at one point in time was weakest from the standpoint that it was in this little sideways consolidation. That was that 1,000 point or so consolidation inside of the Dow. It had been traveling in for several months. Well, if we take a look at that, you'll see, if we take a look at that consolidation pattern, you'll see that it completed that move. That measured move took the Dow up to about 16.5, 16.6. What we actually got up to, or what the Dow got up to, was 16.588. 25, doing that on December 31st. That's why you want to be paying attention to those consolidation patterns. Then what we saw is not only did it complete the consolidation pattern, but it had a bearish reversal signal out here on January 2nd. So that says resistance now inside of the Dow is at 16,588.25. So far today, sideways move. The futures market gave us a nice little sell signal. We'll see if that truly does kick in out here. That is inside the Dow. Now let's go switch over. Let's take a look at the ETFs. We're going to focus in on the Qs out here. We need to focus in on the Qs because it is giving us the strongest message, because it's the weakest of the four indexes out here. So as we take a look at the Qs, volume so far, we've been trading for about, 45 minutes. Volume so far today, 6 million shares. That's pretty good. What does that equate to on a 6.5-hour trading session? Could be, 30 million, 35 million shares. Depends on what volume does from here. But 6 million shares, not too bad. Now what it's coming into, though, and here's the thing. It's coming into that December 18th Ben Bernanke day that had 68 million shares to the upside. So even if we give math, and we use straight line math, and we say, okay, it's about 6.5 million, another 14 minutes to finish off the first hour, then to multiply times 6.5. Let's take 6.5 million. Let's make it 7. So 7 times 6 is what, 42, plus another 3, so you're about 45 million shares. At this stage here, what the Qs are doing, okay, and this is important to take a look at, it's actually coming back into a swing point with light volume, into that breakout swing point with light volume. That is December 18th. Hey, a lot of time left in the trading session. What we can see here, if you look at the bottom of my screen, you can see as volume has been moving down, it has also been increasing. So the selling could become more intense than what we have seen here during the first, 47 minutes of trading out here. But this is what we want to be paying attention to. Let's go take a look at the other ETF structures out here. Let's go see what they are coming back into, what kind of volume. Remember, we were looking at the Russell 2000, noticing that a couple of days ago, meaning the trading session here from January 2nd, it had pulled back. And it pulled back and it had tested a gap. Well, I believe that gap was from the December 20th time frame, if I'm not mistaken. So the volume there, remember I said it pulled back into that gap, rejected it, and it did it with lighter volume. Well, the trading session from December 20th, that has 49 million shares, 48.7 to be exact. So 49 million shares, and they pull back on the trading session of January 2nd, albeit, so you got to kind of keep things in a little bit of a perspective here, right? We had a January 2nd is supposedly a lighter volume day. People still on vacation last week. Maybe even you were on vacation last week and you turned everything off, so now you're just kind of checking back in with the markets, hey, what's going on? Well, on January 2nd, volume had increased. Certainly we saw an increasing volume, but we want to compare it, we want to benchmark it into the trading session that was pulling back into that gap up on the Russell 2000. On the trading session of January 2nd, 44 million shares coming into what we had was 49 million shares. So coming in hotter than you would like. It still rejected that level. You're still above that level, but that's what we really want to be paying attention to now. So far today, really just kind of a sideways day. If you take a look at where the close was on Friday, where we're trading at right now, the close on Friday inside the IWM, 114.69. You're trading at 114.61 right now. Volume today, so far about 8 million shares. So 8 million shares, pretty good volume so far. So you can see people are starting to come back to work here. And so today, as opposed to Thursday and Friday, really, the question is Thursday and Friday just kind of a head fake? Is it real? Because we did see increasing volume on the way down. I don't know the answer to that here just yet. We're continuing to watch the charts, to look for patterns in order to be able to understand that. But right now what we know is the Qs, which is the weakest index, so that's the one that we should really have a lot of focus on. The Qs, thus far, are actually pulling back into a swing point with lighter volume. Now, to get down and test the bottom of that swing point, hey, they've got quite a ways to go out there, but it is still pulling back with light volume. Dow's up 25, S&P is up a point, Composite down 14. Let me check in on the New York Stock Exchange. What is it doing? That's up 16 points with net advance in issues of 517. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 32 points right now. S&P is up 2. Composite off 11. Russell 2000 just turned slightly green. And we're going up to Philly to check in with our man, John, otherwise known as Z, in the den. John, thanks for calling. Thanks for holding. Happy New Year to you.
Happy New Year to you, Steve. Listen, thank you to you and everybody in Florida for shipping some of that warm breeze up the East Coast. I know it's not going to last, but we'll take it while we got it.
Oh, geez, yeah, man, what a cold weekend, I guess, for you guys up there. And then now that blast is how cold? How is it gotten to below zero to where you're at?
Oh no, it was. Well, the temperature is dropping now, but at 7 a.m. it was 47 degrees, and it'll fall off a cliff shortly.
Oh my goodness! You know what? That breeze, unfortunately for us, it's coming down to Florida as well. So pretty wild football games, I should say, out there. But I know you called to check in on Born as a ticker symbol, China Newborn Corporation.
I'm attracted to the price action. This is a U.S. listed equity of a Chinese company, ticker symbol BORN.
Yes.
There's been massive basing on the daily, weekly, monthly. The stock was crucified. It may be a shell game. It may be a fraud. I don't know. But
yeah,
what I can say, looking at the price pattern, it came down formed a massive base.
Yep.
And then there's been some explosive volume both on the daily and weekly chart. So I'm attracted to it for those characteristics. I am flat, to let you know, looking potentially to be on the buy side. So that's why I am calling. Wanted to ask you if you could share with us what you see technically. And, Steve, I might be mistaken, but I have this vague recollection of you actually talking about this name somewhere in the past.
We did trade it, yeah.
But,
I traded it in the past with some clients. We made some good money on the equity. It had some really, back then it had some pretty nice chart patterns. So if we just had really taken a look at only the chart patterns, it had some nice high volume untested highs out there. And so we got in on it. You brought up a couple of things. One, is this, can you trust the numbers? Can you trust what's behind this? Now, China Newborn, folks, what it is, it's a, as John was saying, it's a corn-based edible alcohol type company in the People's Republic of China. So one of the questions I would pose to you, because if it's corn-based alcohol, where is it that on the commodity side for this, where is it that you think corn is headed to? Would you in taking a look at trading this, would you factor in that as an element in this, or you just want to take a look at this as just the straight stock chart aspect and what it's doing?
I am totally open-minded. I have nothing intelligent to contribute. I would merely like to hear what you have to say on the matter.
Well, the matter, so if I take this back into the time frame that we might have been trading this, and I'd have to, let's see, if I take this back 2010, so it would have been, somehow we caught this. So there was this high volume high. I'm pretty sure what I was looking at, John, was back in 2011, back in July. This thing had a nice high volume high that was untested from back on July 7th, right around the $7, $8 mark. And we got in on this thing. It might have been on a Gartley or a butterfly pattern. I can't recall which, but I'm pretty sure that when we were in on this trade here was right around January in 2012 when this thing had gapped up with some nice volume. And what we did at that stage was we just simply went ahead and adjusted our stops. This thing had gapped up with about 1.4 million shares, and we let the market go ahead and take us out of the trade. I think we traded it maybe 2 or 3 times, ended up with a pretty nice net profit on it. But I never did. I started to not really trust the numbers. A lot of those moves up. A lot of that gap up back in January of 2012. So as it began the year, my recollection was that corn was coming down. So it was looking like corn was moving down in price. But that's just that's my recollection. I could be wrong on that. But that what the news on this stock back then, John, was that they had basically sold out their entire year's. The orders that came through was enough to go ahead and take care of an entire year's supply on this company. So I guess eating candy that's got alcohol in it is a pretty popular thing out there. But from that, even for something so popular to go from $5 down into the what did this make it down into about 90 cents or so, $1.05. What was it? $1.05 back in April. I hear the music. Can you hang on through this break here?
I can. Thank you, Steve.
All right, we're going to go back out to John in Philly. We're taking a look at China Newborn. We'll be right back, folks.
2014 has arrived, and Tom O'Brien has put together a special webinar for subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the 3 most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these 3 sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of the special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow's up 29 points. S&P is up $1.50, and we're on the line with John from Philly. We're taking a look at a equity. The ticker symbol on it is BORN, and the company's name is China Newborn. And it's had some, if you were just looking at the stock chart, number one, you would see a huge spike up. Had a huge day on the trading session of October 15th. Went from $1.39 out to $3.12. I think it might have. I don't know what was the speculation, or was an earnings release or something that took place on that trading session, John. But here's what, before the break, what I was saying is that when I had played this stock, and we made money on it, so I was okay with it, but the news that was released back then was just how successful they were. And with that kind of success for a low price stock, having some nice high volume highs, it just, in my opinion, if this was legit, there was no reason for it to pull back to the dollar price range out there. From just a business fundamental standpoint, they had good news, and it just should not have really pulled back to the levels that it did. So to answer your question, I had played this once before. I probably wouldn't stick my money into this. I seem to recall I was listening in on Tom's show one evening. I think it was during that trading day when this thing kind of took off to the moon out here, and somebody had called on it. And I think I went ahead and did just a quick search and saw that maybe the SEC was investigating the company. From what standpoint, I don't know. Have you done any research? Have you done any Google searching or anything on it just to see if there's anything that pops up?
Steve, to answer your question, no. What caught my interest?
Yes.
Or what caught my interest sufficiently to put the question to you is the fact that the stock came down into that dollar range, and laid there for an extensive period. Having laid there for an extensive period, it is simply indicating to me that sellers are exhausted and some group of people are buying it.
Yes.
And then I saw it took off here in the past month or two, and I've just had the experience where long bases followed by breakouts are at least asking the question about. So hence my interest, but it's limited to that set of parameters.
I would say, in that case here, the best way to play this stock would be to have it come all the way back to that breakout session. The question is, can it do that? Fundamentally, I'm really hesitant on this equity, even though I had traded it, and it seems like there's when they do release information, you see these big pops, and then it just doesn't pull back to the breakout area. It pulls back even further, and that's just not how successful stocks seem to operate. You get the breakout, you get the big funds maybe finishing up their their positions where they're going to stay in it for a while. The stocks pull back into those breakouts, they defend those positions, and it moves on. And that certainly doesn't seem to happen with this equity at all. So for people that are interested in playing it, I think the best way, the least risky play that you'd have on a stock like this is doing an unexpired option where you just simply, you pick your price, you take 1% or so of your total equity, and that's the number of shares that you buy. And it does have a high volume high out there because, when I originally was taking a look at that stock chart, that's what had attracted me to it, and it takes you back to October in 2010 out of $20.50. So to me, this isn't like a stock like a Netflix or Hewlett-Packard, it's got a good business model, one could argue, and pulls back in basis for a while and then takes off. I just don't know if China Newborn is it's not in that category.
Steve, I appreciate your time on the matter. For me, it was very helpful to hear what you were thinking back in time. I guess it was a year ago, so that background's well helpful to me. So thanks a bunch.
Yeah, I almost felt, John, when the trade was said and done, the reasons that we got into it were from a technical chart standpoint, and then we made money on it. I actually felt like, as I watched this stock over the time period kind of pull back, and every now and then I would check in on it, I kind of felt like, we got away with one. I know why we got in and it worked out okay, but I don't on good trades, I don't usually feel like, hey, we got away with one. You know what I mean?
Understood.
Yeah.
Well, it always pays to be luckier than smarter from time to time. So.
Absolutely, most
good.
Certainly does. Hey,
Steve,
thanks so much for calling, John.
Great. Bye.
All righty. So right now, folks, Dow's up 28 points. S&P is up 1.5 points. That was on China Newborn. But let's go check in here on Goldilocks. Let's go see what we have going in the metals market. We haven't covered that here this morning. Now, I don't know if this is a real trade. This is a 1-minute chart here for gold. I hadn't been paying attention, but one of the guys one of the guys or gals, I didn't see who, in the den had indicated that the gold did spike down, and it most certainly did. Folks, if the trade is real, I don't have the time to go investigate it here right now while we're live on the air, but this in the minute of 10:15 this morning, we saw gold apparently spike all the way down to a low of 12.12. That's from 12.45. So I don't know if that trade is real. Now, there's volume behind that move, too. In that 1 minute, you saw 11,000 contracts come in. So I don't know if that was a push down to wipe out a bunch of stops out there, what was going on. But irrespective of that specific trade, and that occurred over a 1 minute time period out here. Let's take a look at what gold is actually doing on a daily chart. So let me come back here to my daily time frames out here. Let's see if I can find that. So here, as we take a look at gold on the daily chart, it has, it's trading above the highs of Friday. I think this is starting to hit the radar, starting to hit the desks of all traders out there as being a potential real break. You know, what gold needs to do, it's trading at 1239.60 right now, and we'll know if this is a real break. I've got a descending price channel or, trend line on this, and I would suggest that you would put this on your chart as well. This here goes back to the tops in November of 2012, and it's the red diagonal lines that you see on my screen out here. And one could argue it could be placed a little higher, a little bit lower perhaps, but I'm using the open session here from November 26, right around the 1751 level. And your next set of touch points that you could use, the doji candle from October 28th would be good. And that's right at 1352.90. So right now what we're seeing is gold is broken out. This is a daily chart we're looking at above a trend line, above a short-term trend line. That was a trend line off of that little doji candle from October the 28th. And what we saw here, when you break a trend line, so here's the positive. Let's assume that the trades were real. And what we took a look at. What the trade actually did was, when you break a trend line here, and this is bullish, what the trade actually did was it went ahead and it tested the trend line. Take a look at that trend line, that blue line that I've got on my screen out here. So price, when you break a trend line, whether it's horizontal, diagonal, doesn't really matter. So whether it's a consolidation, which will be a sideways move, whether it's a rising or descending price channel out there, when you break above those areas, what you like to see is you like to see price come back and test it. Now, what I'm really referring to is when the price breaks a descending trend and it breaks above it, you want to see it come back and test it. If something is rising and it gets above it and it comes back and tests it, it doesn't have a whole lot of meaning out there because it was already rising anyways. So here what you're looking for is really the counter trend type signal out there. And so what it did technically, like John and I were talking about technical analysis of that Born stock, B-O-R-N, technically this was actually kind of a beautiful thing. So the scare, the push down maybe to wipe out some stops, whatever may or may not have happened here. What I can tell you that technically, not knowing anything about it, what gold did was it moved down and it tested a little trend line that it broke out of. And to me, that's very bullish. Now, the next bullish phase out here is going to be breaking the larger downtrend channel line out here, which it has not done, which gold has not done, really coming back into the early 2012, October 2012 time frame out there. So gold, that actually was a nice little bullish move out here. If we go take a look at silver, see what silver is doing. It's trading right now a little bit down a penny, so no big deal. So just sideways out here. Silver, what it also has done now today, second day in a row, it has broken, well, it did this on Friday. Friday, as we were taking a look at, Friday actually broke that little descending price channel. Today, came down and tested it and rejected that. So what we're seeing here are actually bullish signs of silver. Now, the other thing that's nice and bullish about it, well, I can't really say that. I'm withdrawing that comment here. So, but I can tell you that from a trend standpoint, what you have seen is you've seen two rejections of that descending price channel, and that is bullish. Let's go to Brian in Jackson, Mississippi. Brian, thanks for calling. Thanks for holding. Happy New Year to you.
Same to you. It's cold here also.
Yeah.
It's very unusual. It's 23 degrees here right now.
Yeah, probably pretty unusual because they're probably going to announce a wind chill for you.
Oh, yeah. It's getting down to 12 tonight.
Oh, man. Stay warm.
Thank you. Hey, look, I've got some Apple calls for February, and I was looking at the turnaround today, interday. Does it look like a legitimate turnaround, or maybe just taking a look at it, see how it bounced off that bottom?
It is important, in my opinion, technically speaking, it's important for it to hold that December 18th low, that 538 level. But let me put this on a little shorter term chart for you. Let's just take a look at, see what a 10-minute chart for Apple shows us here. Let me just refresh my screen so it maybe gives us a little bit more information to take a look at. And when I take a look at, let's let this update here. So right now it's trading at 539. Come on, baby. Sometimes there's too many things running on. Now, what month are your call options?
February. I've got
February. Okay.
I got Feb 600. So,
all right. Let's see the push down here on a 10-minute chart. Let me see. Did this form a little butterfly pattern for you? And when I'm looking at, I'm coming off of the about 2:10 in the afternoon on December 18th, all the way up to a high at about 9:40 in the morning on December 24th. Oh, I grabbed the wrong thing here. Let me do this once again here. So let me see if this actually formed a little butterfly for you, because what would be nice is, so if it was very close to forming a 1.272 butterfly this morning, and looks like on a 10-minute chart an A to B equals CD down pattern as well that it completed out here. So that was, your 1 to 1.272 A to B equals CD. Okay, so now we know the patterns that it completed. So the issue that you've got to contend with is at the open, you got some pretty big volume down there. It was 1.4 million shares in that first 10 minutes of trading. And what this has been doing, this has been bouncing back up, in essence, on light volume here. And so right now what it's doing is it's just filling the gap from Friday's close out there. That had 1.2 million shares on that session, and you're coming into that gap here with only 436,000 shares, and that 10-minute session is going to end in 4 minutes. So the question is, how is it that you trade this? Let's take a look at, was there also a Gartley buy pattern that's set up? So I'm pulled this back a little bit farther, Brian, and a 10-minute chart that I'm looking at, and I'm coming back into like a swing point around 12:30 on November 21st out here, and the high that was put in right around 9:40 on December 5th. So what you had really that was occurring this morning was you had pretty close to 1.272 butterfly, and you also had a Gartley buy pattern, a .618 Gartley buy pattern. Do you see that? Are you watching Tiger TV?
No, I'm actually on the road right now.
You are? Okay. So here's the answer to your question. Here's the answer here's how I would take a look at it. Right now, the way that this is trading, it says to me, so you've got two bullish patterns that have completed. Unfortunately, you didn't really get with it on that 10-minute chart. And, I know you're not trading on a 10-minute time frame, so we got to kind of keep things in a matter of perspective here. What you don't want to see it do is you don't want to see it close below the low of this morning at 533.60. I think if you see it close below that 533.60 out there, that will have to make you come back and rethink that trade.
Let me ask you this. You were earlier this morning, you were talking about that hammer low of 538, whatever
yes.
it was.
Yes.
Okay, but the fact that if it broke below the low and then closed back above it, would that still be legitimate, as far as being positive?
Yes, to me it would. I think breaking that low is a problem. Testing the low is not a problem. Now, what I will say is that the volume on that trading session, December 18th, that's a legitimate daily trading session. That had 20 million shares. You came back on Friday with 14 million shares. So far today, it's done 5 million shares. So you're coming into it. And that's a swing point. So you came into that swing point with volume here this morning. So to hold it is okay. To hold that low is okay, but it's not looking great. I'll say that much.
Right. Yeah.
I mean, it's not the kind of action that you want to see, necessarily being long Apple. But if you're on the road, if you can hold on through the break here, I'll take a look at a couple other things, and we'll go right back to you. We'll take a look at Apple, and if that's all right with you.
That's fine. Thank you.
Okay, perfect. All right. So we're going to go back out to Brian in Jackson, Mississippi. By the way, cold Jackson, Mississippi. He said it's 23 degrees out there. That might be warm compared to where you are. In fact, I know we've got some listeners up in Minnesota. I believe I saw that it was like 30 or 40 degrees below zero, something like that. That's a cold day. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 11, really flat. S&P is trading totally flat out here. Composite is back 13. We're going back out to Jackson, Mississippi. We're talking with Brian, and we're taking a look at Apple. I remember, Brian, the reason I'm glad that you held on here through the break, I remember over the weekend as I was looking through a number of different stock charts, Apple happened to be one of them. And what I have on my screen, what I put on my screen that folks are looking at are 2 moving averages. Now, you know, most money managers are now back from vacation. Oh, I guess Brian dropped. So, but I know Brian's listening. So most money managers are back from vacation now today, and it's the beginning of the year. So you've got all of this fund buying going on, right? Because we've got all the automatic deposits, all of the 401k money starting to roll in here. And what traditional money managers might do is they might take a look at 50-day and 200-day moving averages. And what Apple has done here this morning, Brian, I remember looking at it over the weekend and noticing that Apple had come down to its 50-day exponential moving average on Friday, and that's what held price. The 50-day exponential moving average, by the way, is about 539.56. You're trading at 541 right now. So with fund buying coming in, I would watch this today, tomorrow. You'd want to see this thing really start to move up with some volume out here, but it's that 50-day. So we were taking a look at the low, this little hammer candle. It was really more so this little island reversal pattern, in essence, that Apple has in it, folks, was December 18th, December 19th, December 20th out here. And the reason when those are bullish patterns, when those things fail, and by failing I mean they close below, in this case here the low is 538.80 out there, it's a very, very negative thing. Well, on top of that, it would be this 50-day exponential moving average. If price gets below that, in fact, you can see here, you wouldn't have caught the top with regard to Apple. That's for sure. As far as selling the highs back here at the $700 range. But you can see once price dipped below the 50-day exponential moving average, that took place on the trading session of October the 4th out here, 2012, October 5th. Price bounced back up into it on October 17th. It acted as, in essence, a resistance line all the way down. Every time that it came back up and tried to tag it, the only time that it was able to break through when there was really a beginning of a potential change in trend was back in April in 2013. So, Brian, I would be paying attention to that 50-day exponential moving average as well. And the reason is because money managers are, and with fund buying going on, if it can stay above it, that'd be positive, that'd be bullish. And if it cannot, that would certainly be bearish. So, folks, what are we going to be paying attention to today? If you go back and you listen to the first hour, we were taking a look at the futures contracts. We were looking, and I'll put those up on the screen, we were looking at the Gartley sell pattern that had formed inside of the Dow, both on the 120-minute chart is more important, right? We'll take a look at that. Here's the Gartley sell pattern in the futures market for the Dow. It formed a beautiful 0.618 Gartley sell pattern. You had a 1.272 expansion of your B2C swing point and a 0.618 retracement off of the December 31st high out there. And now what you've got is a wide-ranging by our bearish engulfing candle, biggest one that we have seen in quite some time, to the downside on the 120-minute chart. That says that what the Dow futures ought to do now is they ought to form this A to B. The ultimate pattern of any Gartley is that it turns into a new A to B equals CD down. In this case here, that's what is unfolding, it looks like here, inside of the Dow. In fact, I would say with probably 90% certainty that the Dow should move down to about 16,213 based on that wide-ranging bar here in this 120-minute session. Of course, it doesn't complete here until Basil's show is over. So stay tuned for Basil Chapman. He might be revving it up. He might be trying to get rid of that bearish engulfing candle. That I do not know, but he'll be able to tell you. Have a great Monday, folks. I look forward to seeing you tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.